The broadcast is now starting. All attendees are in listen-only mode.
Welcome to the Wyoming Women's Business Center's 2019 webinar series. Today's presentation is 10 best tax planning tips. And my name is Christine Langley, and I'm going to be your presenter as well as your moderator today. And you'll notice the GoToWebinar control panel on the right side of your screen. And so I just want to call attention to both the questions panel as well as the chat panel. If you have any questions or comments, please use these panels to communicate with us during the presentation. And so this webinar is being recorded and it's going to be available on our YouTube channel if you need a refresher or if you'd like to view it again. So you can just go to our YouTube channel on youtube.com, the Wyoming Women's Business Center, and make sure you subscribe and check out other webinars as well. You can also find us on our website at wyomingwomen.org or look for us on Facebook or Instagram. And so immediately following this presentation, we're going to launch a survey. And so we'd ask that you take just a few minutes and complete that survey because it provides us as well as our funding partners with some valuable information. I'd like to introduce both myself now as well as my co-presenter today. Again, I'm Christine Langley. I'm a business counselor here at the Wyoming Women's Business Center. And then we also have Abby Hagerman on the line. And Abby is a licensed certified public accountant, better known as a CPA, with a master's in accounting. Her experience as a public accountant with ACM in Laramie includes both audit as well as taxation. She's also actively involved with the women's organization PEO. It's a philanthropic organization of women supporting other women to achieve their dreams of pursuing higher education. And so I thought her background and her professional interests were just a perfect fit for our group here at the Women's Business Center. So I just want to welcome Abby. Welcome, Abby.
Thank you for having me.
Excellent. So Abby's our resident expert when it comes to taxes. And so she's going to be answering questions along the way and just giving some additional feedback as I go through my presentation. So to get started here today, I'm just going to tell you quickly a little bit about the Wyoming Women's Business Center for those of you that are new joining us for the first time today. And then we'll jump right into our presentation and then we'll leave a little bit of time at end for questions and answers. And so to start off, the Wyoming Women's Business Center is a nonprofit organization. And what we do is we assist people who want to start or expand a small business specifically in the state of Wyoming. And we do that through three distinct programs. So the first is business training and counseling. The second is access to capital through our microloan program, as well as our individual development accounts programs. And then lastly, we have a professional artist development center. And so today's webinar series is actually brought to you from our microloan program. And so we do microloans anywhere between $500 and $50,000 to help fund business startups or expansions. There's a few specific requirements, one of which is that you have to be a resident of Wyoming and your business has to be located and registered within the state. If you'd like more information on the microloan program, you can contact Waldo Smith. He's our microlending director, and Waldo's on the line today as well to help us monitor questions. All right, guys, so let's dive right into our top 10 tips here for taxes this year. And our first tip is bank account reconciliation. So account reconciliation is the process of matching your transactions against your bank or your credit card statements. And I typically recommend this review be done once a month, actually when you receive your statements. But if you're behind for 2019, now is the time to get caught up. Don't wait any longer. And so pull out all those bank statements and start matching the transactions against your register, whether that be inside an accounting software like QuickBooks, or a manual ledger that you're keeping for your business. So you're going to want to do the same for any business credit cards. And so this process, of course, can be done fairly quickly if you're connected to your online bank accounts through QuickBooks Online and you perform regular upkeep throughout the month. But remember, it's important to learn how to use the undeposited funds account in QuickBooks so that your transactions match what's recorded on your bank and your credit card statements. It'll help you make sure that the dates are in alignment. So before we dive too much into this presentation, I just want to get a sense of who's on the line with us today. And I'm going to do that by launching a quick poll just around bank reconciliation. And so what you will see is a poll is going to pop up on your screen, and I'm asking the the question, how often do you reconcile your business accounts? And so I just want you to select one of the answers here. Do you do it ongoing because you're connected, to your online banking account, or at least every month? Do you do it once per quarter? Do you wait until the end of the year, or do you never reconcile and you let your tax preparer or your accountant do that? So kind of where are you at when you think about reconciliation? So I'm just going to give people a few minutes to answer. All right, so I think all of my votes are in, so I'm going to go ahead and close this poll and let's share the results. Looks like we've got a bunch of overachievers on the line today, Abby. Everybody is doing this every month, so that's a great start. Okay, good job on reconciliation, guys. So let's go on to number 2, which is reviewing your profit and loss statement. So first things first, I don't want you to be intimidated by your P&L statement. I want you to remember that a profit and loss is simply trying to look at your sales minus your costs. So of course it can get more complicated from there depending on the detail that you enter. But when you're looking at your profit and loss, it usually is going to list your sales, revenue, and income first. That's essentially all the money that your business has made. And then your costs and expenses are going to come next, what it costs your business to make that money. And then at the end is going to be your profit or your net income. So you're going to see a bunch of subtotals throughout your profit and loss, but you're ultimately looking for that profit number at the bottom, or in this example that you're looking at on your screen, it's called net income. So depending on the details of your business, these categories can be broken out in different ways. So for example, you might reference different sources of revenue if your business generates revenue through different means. For example, maybe you have in-store sales and then you have online sales. So think of this as your top line of your profit and loss statement. You're also probably going to break out your expenses between maybe like overhead and materials. Usually you'll see costs broken out based on the cost of delivering your product or service. We call that COGS, cost of goods sold, and the general operating costs of the expenses of the business. So those are usually two different categories or sections. And so people start looking at revenue minus COGS to get their gross margin. And this gives you an idea of how much you then have left over to cover all the other expenses after you've covered the cost of producing your product or service. So in this particular example on your screen, you're going to see that the total income was $6,259 with COGS of $1,750. That gives you a gross profit of $4,509. And then the other expenses in the business totaled $2,808.47. So if you go all the way to the bottom, you'll see your net profit, net income, net earnings, whatever you want to call it, is your bottom line. And this shows your business's profit or loss. So if you show a loss, it means you spent more than you earned. If you show a profit, it means you made more than you spent. In this case, this particular business made $2,200.53. So again, if you're using an accounting software program, you should be able to run a report for your profit and loss statement. The review will be to ensure your income and expenses are entered correctly and they're categorized correctly. So it's always a good idea to go through your statement line by line for accuracy. And of course, I always recommend people do this on a monthly basis along with their bank reconciliation. And Abby, you want to add any stories or anything to this on P&L?
Sure. So, kind of reiterating what Christine said, going back through line by line is really important. If you're doing it monthly, you can catch, errors more quickly, and that'll be easier to resolve because I can't remember what I did yesterday, let alone 6 months ago. So doing it timely is really important. Watch for things that are negative that maybe shouldn't be. Why is advertising negative? Did you accidentally post a deposit into that account or a refund or something along those lines? The other thing that's a pretty cool feature of QuickBooks is that they have the Ask My Accountant account, which as an accountant, I do enjoy the Ask My Accountant account. However, what's most helpful is if you do use that, make sure that you put a memo in there. Don't just post the check in there and then I'm looking at it. I'm like, oh gosh, I wonder what that was for. Leave yourself a memo so I know what it was and that you can remind yourself as well. But other than that, right in line with Christine, just look through that and see if it looks reasonable and makes sense.
All right, perfect. So let's move on to tip number 3, which is capturing all of your expenses. So let's drill down a little more on these expenses because this is really key for tax preparation. And so I want you to ask yourself, do you purchase things for your business ever using your personal Amazon account or a personal credit card? Have you ever used, say, your family PayPal account to subscribe to something for your business? Because even if you use your personal funds for business expenses, those expenses are still legitimate tax deductions. So if you aren't careful, you could overlook some of those since they're not included in your business bank or your business credit card statements. So that's why scanning all of your personal expenses for any business purchases is always part of our top 10 list for small business tax preparation. And so the next question is, how do you capture these expenses? So you want to review your personal account activity from the previous year, isolate any business expenses that you find in them. And then if you act before the end of the tax year, so if you do this between now and December 31st, you can actually write yourself a reimbursement check from your business bank account and capture the expenses that way and categorize them accordingly. But often there are expenses you may not remember until after the beginning of the new year, or maybe you just didn't get to it. So if that's the case, then you want to enter the expenses into your bookkeeping by debiting the appropriate expense account and crediting an equity account. And so if you're like many business owners, and when we get into using accounting language like debits and credits and journal entries, that gets too confusing for you, don't panic. I just want you to add a note with your business tax prep paperwork asking your accountant or your tax preparer to add those expenses. And then just a quick note here to remember at the bottom, update those mileage logs. If you can add up to be a size, any mileage, can add up, but sometimes it can be a sizable deduction on your taxes. So this is your opportunity to get those mileage logs updated and accurate before the end of the year. All right, our tip number 4 is essentially the reverse of tip number 3, right? It's confirm any personal expenses that were paid from your business accounts are actually properly recorded. So just as you might purchase things from your business using your personal accounts, sometimes it's the other way around, right? You had money in your business account, not in your personal account. So when you ran and, got gas or went to the grocery store, you might have grabbed your business credit card instead of your personal credit card when you were in a rush at the checkout line. Or maybe it had something to do with balances and you hadn't transferred money yet. Whatever that might be, those personal expenses need to be recorded properly in your bookkeeping system so they're not improperly deducted as a business expense. And so let's get a sense if this is an issue for anybody on the call today. And I'm going to launch another poll. And the question is, how often do you charge a personal expense to your business? And so we'll give people a couple seconds to respond here. Abby, do you find this is a common occurrence with some tax clients of yours?
I do. I think it's really important to stress that your personal expenses are personal and your business expenses are business. But in real life, yes, sometimes they get intertwined. Like Christine said, it's very important that you get things reimbursed the correct way. It's good to tell your accountant what happened. What's even better is for you to actually cut those checks. Write a personal check to the business because you forgot to take your personal credit card to the store with you. Or if you paid for a bunch of stuff for the business, have the business write you a check. There's something called piercing the corporate veil. IRS will talk about that, and they could deny expenses if you're chronically intermingling personal and business expenses. So just something to keep in mind. Keep it as much as you can separate, but I know sometimes that's not possible, so do your best to handle it appropriately.
All right, and it looks like we've got some people adhering to our rules here on the call today. So 75% of you say, rarely do you do this, and if you do, typically it was a mistake. And a quarter of you are saying you never do it, so you're keeping it totally separate. So bravo to everybody on the call today. And so ideally, like Abby said, you would repay your business for these expenses. But again, it's much more common to simply enter the transactions as a credit to your checking or credit card account and a debit to either a loan to the business or equity account. And again, if that's too much accountant speak for you, just ask your accountant. That's what you guys are there for, huh? All right. So let's move on to tip number 5, and this is meal expenses. So this can be a confusing category for some. So I just want to cover what the general rules are here. So generally speaking, expenses for meals you have with your customers or your clients are only 50% deductible. However, certain meals, such as those purchased while you're traveling, they might be 100% deductible. And so, Abby, I know you had some examples of when traveling it's not deductible and when it is. So you want to talk about that a little bit?
Sure, yep. So meals are a tricky thing. So when we're traveling, I flew to a conference a couple weeks ago to Seattle. Meals then are going to be 100% deductible. I also do a lot of work in Cheyenne. Me not packing my lunch is a choice that I have made and is not considered a travel meal. I didn't have to go overnight. I didn't inconvenience my life. So therefore, I shouldn't be expensing my lunches through my business account. So that's one thing that we see a lot of people kind of be, aggressive on and be like, well, I'll deal with it if I get caught. But rule of thumb is if you're on a day trip, you running through the drive-through at Wendy's or something, it's not deductible as 100%. It probably shouldn't even be at the 50% because it's just the fact that it was convenient for you to go through a drive-through instead of packing your own lunch.
Okay. And so if you classify all your meals as meals and entertainment expenses, just recognize that your tax preparer is only going to deduct 50% of the expenses as a business expense. And so if you take a little extra time to subcategorize those expenses as travel or employee meal expenses, then it could maximize that tax deduction.
Christine, can I add another little point in there?
Please do.
So if you have an office and you're supplying, coffee or soda or something, like I said, for convenience purposes for your staff, or maybe you brought in pizza because training was over the lunch hour, get those things into supplies or office expense, because like Christine said, if I see meals and entertainment as a tax preparer, it just immediately is going to go in at a 50% deduction. But you buying things for the convenience of your employees at work, those should just be expensed as supplies.
Oh, good tip. All right, I like that. Okay, number 6, 1099s and then issuing 1099s. So these forms known as 1099s, they serve as basically a tattletale document to help the IRS ensure taxpayers are reporting all of their income. So if your business is service-based, then you're likely going to receive 1099s from a number of your customers. And since 2012, credit card processors and payment processing companies like PayPal and Stripe and Square, they're required to issue a new kind of 1099. That's called a 1099K. And it's used to report payments in excess of $20,000. It's also issued when a payee receives payments for more than 200 transactions in a year. So even if you're, a small business, say you're a food truck or an ice cream business, you'll have well over 200 transactions in a year, so you might get a 1099K, regardless of the annual dollar amount. So most tax preparers don't actually use your Form 1099 or the 1099K to prepare a business tax return. They just review them to ensure that their clients are reporting at least as much income as the total reported on the 1099s received. So usually you're going to have way more income than the 1099s that you receive. And so it's just a quick check and balance. And that's why this tip makes our small business tax preparation checklist every year. So now let's talk about if you have to issue 1099s from your small business. So there's 2 questions on business tax return forms you have to answer. So the first is, did you make any payments in 2019 that would require you to file Forms 1099? And then if yes, how and when are you going to file the required Form 1099? So the IRS requires you to issue the Form 1099 to any non-corporate service provider to whom you pay more than $600 in a given year. And so there's other rules that apply to 1099 reporting as well. So you want to double check with your bookkeeper or your accountant to ensure you've issued all of your necessary 1099s. And you want to make sure you can answer those 2 questions that I mentioned above honestly. So most accounting software programs have the ability to actually issue the 1099 forms. But this is another simple request that you can make to your tax preparer or your accountant to be confident that all your filings are being done to the IRS. And remember that the deadline to issue the 1099s for this tax year is January 31st, 2020. And from what I understand, the IRS has gotten pretty serious about the 1099 miscellaneous due dates. So penalties have risen pretty significantly, and they can apply separately to copies sent to recipients and to the IRS. So a company can face penalties for late filing. They can be as high as $540 for each 1099 miscellaneous sent late to a recipient, plus another $540 for each form not filed timely with the IRS. So that covers 1099s, but I also want to slip in some information from Abby around W-9s, because this is a good time to talk about that. So Abby, I'll let you speak to W-9s.
Perfect. So the W-9 is a form that a lot of times we forget to use when we're in business. So anytime that you're working with a new company that you're going to pay for services, or it could really be anything if you're not sure, is to ask them to complete a W-9 before you provide payment to them. The W-9 collects information on what's your legal name, what's your legal entity type. Are you a corporation? Are you a partnership, a sole proprietor? What's your EIN number? What's your address? All of those things. So that makes it really easy at year end when you print the list of people that you've paid more than $600 to. Now you can quickly go over, pull out your W-9 and you know the EIN and whether or not they even have to be issued a 1099. Because if it's a corporation like Walmart, you're not going to send anything to them. So just something good to get in the practice of. It's harder to go and ask for somebody for that information if they've already been paid and you're done working with them.
Excellent. All right, so let's launch a quick poll. Again, I just want to see where everybody is at on issuing their 1099s for their business. So of these three options, what best describes you? You issue them yourself using your accounting software, you delegate it to your tax preparer or to maybe a staff member, or you don't know because you haven't really been issuing them. All right, we've got about 60% of the vote in, so I'll just wait a few more seconds. All right, guys, so let's share this out. Looks like we got about 33% that is issuing it themselves, and we've got about 67% that doesn't know. Okay, so if you are in the I don't know category, then make yourself a little note to have a discussion with your tax preparer or your accountant sooner than later, right? Because we don't want to miss the deadline to find out if you do need to be issuing 1099s to anyone. Abby, anything to add to that?
No, I would just say if you're uncomfortable, just ask your accountant. We prepare them all the time. We also do W-2s for people. So year-end reporting is kind of our gig. So don't be afraid to reach out and ask for help.
Okay, perfect. All right, guys, number 7, we're going to jump into balance sheets. So the balance sheet is another simple report, and you can run this typically from your accounting software program like QuickBooks. The two important areas to review on your balance sheet for tax preparation purposes are asset purchases and loan balances. So assets include things like furniture, computers, vehicles, but typically large purchases. Generally speaking, we say an asset has to cost at least $500. Most accountants and tax preparers say it's $2,500. So it has to be something, much larger than just a basic supply for your business. And it's expected to be in use for more than 1 year. So assets have to be depreciated, meaning the full purchase price of the asset is not usually deducted as a business expense in the year the asset is purchased. It has a lifeline or a life to the deduction. And so your tax preparer can run the depreciation schedule, but they will need to know when the asset was purchased and what was included in the purchase price. So pulling out those receipts is going to be important, and this is going to help you determine how much depreciation can be recorded within the tax year. And your tax preparer may also want to retain a copy of the receipt or other purchase documentation in their work papers going forward. So lots of small business owners record the entire amount of their loan payments as a decrease in the liability owed. And not only does this cause the loan balance to be reflected inaccurately on the balance sheet, but it also doesn't separate out the interest paid. And so loan payments against the principal are not tax deductible, but the interest on the loan is. So if you're going to set up a loan in your QuickBooks software, it's important to make sure when you're making those payments that that payment is getting split between two different categories. So I want you to review your loan statements as of the end of the year, either with your bookkeeper, accountant, or tax preparer, and make sure those loan balances on your balance sheet match the balances on those statements. And in the case with bank and credit card statements, many tax preparers will want to review your loan statements before preparing the tax return. So you're going to include those in your paperwork that you take to your tax appointment. Abby, how often do you see that mistake where they're not breaking out the interest?
A lot of times we see, actually more often than it going to the balance sheet, usually we see loan payments as an expense account. If that's what you're doing, that's totally fine. If you're going to post that same payment to the same place all year long, just make sure you provide, your accountant, your bookkeeper, your tax professional, that year-end interest statement so that we can get everything classified correctly.
Okay, great. All right, we're almost to the end here, but we would be remiss if we did not include estimated tax payments made during the year. So this seems obvious, but believe it or not, sometimes people actually forget that they made an estimated tax payment earlier in the year, right? The year takes a really long time, and maybe you made a payment in March or April and you didn't record it, or it didn't get recorded correctly in your business accounting software or in your ledger. Possibly because it came from your personal account instead of your business account. And so this is just a reminder that your tax preparer needs to know if you made any estimated tax payments to the IRS, because you're going to want to deduct that amount from what you owe the IRS for the tax year. So hopefully you'd catch this type of thing when you're reviewing your personal expenses for your business expenses. But I just always like to mention it just in case.
Can I add one thing there, Christine?
Please do.
Please make sure that you tell your tax preparer what day you've mailed in your estimated payment, because that's really important for a calculation. If for some reason you accidentally forgot to send your September one and you sent it in November, we need to make sure that we report it that way.
Okay. All right, number 9, file and pay your taxes on time. So let's start with a little poll here and see how everybody did last year. Did you file and pay your 2018 taxes, last year's taxes, on time? So this is simple, just a yes or no. I'll give everybody a couple more seconds to get their votes in. All right, we got some rock stars on the call today. Everybody says yes. Congratulations. You are responsible Americans, and we appreciate you. All right, so here's what I want to say about filing and paying your taxes on time. If you owe money to the IRS that you can't pay for some reason, then you're probably pretty nervous about the tax deadline approaching. And while you may be tempted to skip filing your taxes and hope the IRS doesn't notice that you owe them money, this is a bad idea. Not only is the IRS likely to fine you, but you're going to face much harsher penalties for not filing your returns than you'd face for not paying the amount you owe. So if you owe money to the IRS, you need to file your tax returns and pay what you owe by April 15th of 2020, and that would be for the 2019 tax year. If you can't file by the deadline, something has happened, your books are a mess, you need more help, you can request an extension until October 15th of 2020. But I want you to remember that an extension on your time to file your paperwork is not an extension on the time you have to pay what you owe. So I know that can sound confusing because you're thinking, well, if I don't have my taxes done, how do I know how much I owe? But if you get a filing extension and don't pay your tax bill by April 15th, you'll still face late payment penalties in most cases. So penalties for failing to file your taxes and paying your taxes late are both charged in addition to any interest you owe on your unpaid tax balance. So our recommendation, of course, is filing your taxes on time. And if you can't pay what you owe, then you can just take one of several steps. to try and keep your IRS penalties to a minimum. You may want to consider whether you could potentially take a personal loan to pay what you owe, depending on whether that loan rate is lower than the penalties and interest the IRS would charge you. You could also explore IRS payment plans that could reduce the penalties you're subjected to. So make sure that you don't face the same problem next year, and make a plan to save for taxes throughout the year, or adjust your withholdings so enough money is taken out of your paycheck to pay the IRS what you owe. And if you take an owner's draw from your business, then you want to adjust the amount to include projected taxes, and set that money aside in a savings account for future taxes, or make an estimated payment to the IRS. So Abby, I'm sure you have plenty of client stories on this one.
Yeah, so penalties on business returns, if you forget to file on time, that's including the extension deadline, is per partner per month. So I had a client who decided that they weren't going to file on time. It was no big deal. They didn't need to worry about it. And we kept saying, no, you should probably get your stuff in. And by the time it was all said and done, they had $13,000 in IRS penalties. So not a game that you should want to play. Hurry up and get your stuff in and get filed, because that's just $13,000 they could have used to invest in their company or do something personally with.
Grow their business, absolutely. All right, well, thanks for hanging with us today, guys. We are finally at number 10, and my tax tip number 10 is decide if you need help. So I want you to think about when it's time to ask for help. Delaying your financial reviews will just cost you more money and time later. So it's important to understand what your personal limitations are. And so if accounting and bookkeeping is not your top skill, it's okay. That's why we have people like Abby in the world. They like this stuff, right? We don't understand why. I'm just teasing Abby, but they do. So the important thing is that you ask for the help you need, and you do it sooner than later. So lots of tax preparers, they create client organizers to help ensure that their clients are prepared for their tax appointments. So asking for a client organizer or other guidance from your accountant can prevent a lot of headaches as you prepare for your tax appointment. And you want to schedule some time to review your previous year's books with your bookkeeper or your business counselor or your accountant, whoever your advisor is in this area, and make sure any questions that you have been resolved. And so being comfortable with your books before your tax appointment is going to make that appointment go so much smoother for both you and the tax preparer. So we can't encourage you enough to raise your hand and ask for help in areas where you feel like you need help. There's plenty of resources in Wyoming specifically that can help you do that. And of course, the Women's Business Center is one of those. So I just want to launch a final poll, because I want to hear from the audience that is on the call today. Select the answer that best describes you right now. Do you feel like you understand the rules and you can file your taxes on your own by yourself? Or do you have an accountant or a tax preparer that you're already working with? Do you need to find an accountant or a tax preparer? Or are you just lost and you need one-on-one help to kind of clean up your books and your accounting? So this is confidential, right? We don't know who's answering what questions. So you can be honest in this. And I've got about 60% of the vote in. So I'll give you guys a couple more seconds to vote, and then we'll share this out. And then I want you guys to start thinking about your questions. If you've got questions for us today. All right, let's take a look. So it looks like I've got 50% of the people on the call are saying they're filing their taxes themselves. They feel like they understand the rules and they can pull this off. So good for you. I've got 25% that say I need to find an accountant or a tax preparer. And then I've got 25% that say, hey, I'm lost and I need some one-on-one help. And so that's good recognition on your part. It's why you're on this call today. That's great. And so now what you need to do is you need to raise your hands. You need to call the Wyoming Women's Business Center. You need to contact an agency that can get you some one-on-one support. And we can always help make recommendations of bookkeepers and accountants and resources in your area within the state of Wyoming. All right, so questions. Let's take a look at our questions panel and see if we have anything coming in. Of course, Abby and I have a tendency to be thorough, so it would make sense if you guys don't have a ton of questions. And while you're thinking about your questions, I just want to recognize our funding partners really quick. The Wyoming Women's Business Center is made possible through lots of partnership agencies, primarily the Small Business Administration, as well as the Wyoming Business Council. And so we are very, very thankful for their support. And then I want to remind everybody that we do have business counselors at the Wyoming Women's Business Center to help you. And this is our contact information if you're interested in connecting with anyone there. And then finally, at the close of this webinar, a survey is going to pop up. And so I'd ask you to just stay on the line, for another 60 seconds and complete this survey for us, because it does really help us with our planning and scheduling for webinars in the future, and lets us know if we're hitting the mark with everyone. Abby, any last tips or comments that you want to make before we sign off today?
I would just say thank you all for being here. You obviously, know enough that, finances are important to keep your business running. And, like that very last tip that, was on there, if you aren't sure of something, pick up the phone and call. Raise your hand and say you don't get it. A tax accountant isn't there for just, April 15th or March 15th. We're here all year round. So tap into those resources so that accounting is less of a headache for you and you can focus on what you do best. So thanks again for your guys' time.
All right. Excellent, everybody. Have a great week and a good Thanksgiving. Thanks for joining us today. Bye-bye.